All right, so those are the top headlines that we are tracking at the moment, but it's a good day of trade. There is green on the screen. And yes, the ending of the day yesterday also suggested that there is a little bit of positive energy in the market. At the moment, 15,980, just shy of that 16,000 mark, which it had conquered already when it comes to Nifty 50, almost 1% gain at the moment. Sensex is also gaining almost 467 points from a little lower than the 500 points gain that it had seen. Now, the bank Nifty, that is showing a little bit of outperformance, and that's what is really giving that thrust to the overall market, over 1% up in trade today. Mid-cap universe also not too far behind. Slight underperformance to the key indices, and still the broader market participating and keeping the advanced decline ratio as well as the market strength quite healthy today, Pavitra.
Oh, absolutely. This is a good-looking screen, and especially if you compare it to what we have been seeing for the past few days and weeks. But for now, it is really the metal stocks which are shining in trade. Hindalco leads the pack higher, so that one is up on your screen, around 3.5% higher on Hindalco. The likes of Tata Steel, JSW Steel also all doing really well. Take a look at the move seen on Vedanta. Of course, these stocks have seen a sharp correction in the time gone by, but today they're holding up quite well. Some of the pharma names, by the way, doing very well. The likes of Apollo Hospitals, Cipla. You have Sun Pharma, which are in the green, and on the downside it is FMCG, which are, you know, some of the stocks which are in the red today. So ITC, Britannia, Marico, these are some of the names which are under pressure. But that's the market action. We're going to come back to this. First up, India's trade deficit has widened to a record high of $25.63 billion in June, and this comes despite a 16% growth that we saw in exports. This is because imports have soared more than $63 billion, which is a growth of 51% if you look at it on a year-over-year basis. Ekta is standing by, and she's compiled all of those highlights. Ekta, tell us more about this.
Thanks for that. Well, yes, in fact, the trade deficit for the month of June has hit a fresh high of 25.63 billion, which compares to 24.3 billion in May of 2022, which is last month. So there has been a rise which has taken place month on month. Now, exports have come in 16.8% higher, which is a monthly record high of $37.9 billion. But it wasn't enough to sort of pull the trade deficit lower. That's simply because the imports were up 51% on a year-on-year basis, which came in at $63.58 billion versus $42.1 billion year-on-year. Now, the imports, if you see it on a month-on-month basis, there's been a rise on a month-on-month basis as well by around 0.6%. Now, the imports were led higher by the likes of crude, gold, as well as coal, which saw higher imports this time round. So oil imports were up around 94% to $20.7 billion versus $10.7 billion same time last year. Gold imports were at around $2.6 billion. They came down on a month-on-month basis by over 50-odd%. But if you look at it on a year-on-year basis, there was a huge scale up in terms of gold imports. But the view is that hopefully the rising gold import duty, which was announced by the government a couple of days ago, could probably ebb the interest in gold, and hence we could probably see some amount of reduction going forward. But the other key point is that coal imports rose quite significantly, so it was up over 240-odd% this time round on a year-on-year basis. And if you look at the parameters such as the non-oil imports, that will be telling to give you a sense that even ex of oil, the imports were high. So it was up 36.4% to $42.84 billion. And ex of gold as well, which is basically the non-oil, non-gold imports, were up close to around 32-odd% on a year-on-year basis, which added to the entire import bill and hence the surge in trade deficit.
All right. Thanks, Ekta, for giving us all those important details on these macro numbers. And the biggest takeaway, that oil import bill anyways was a known concern. But non-oil import bill has also inflated, and that is really putting pressure on the macro numbers. Earlier today, we also caught up with a number of economists to really understand what they made of the trade data for the month of June and the way forward. Here's a slice of those expert views.
Oil prices remain significantly elevated. Most of the commodity prices also earlier were elevated. Of course, from April, May onwards, we have seen some kind of a peak out, and from there, moderation. Coal prices and the coal imports have been on rise. So we knew that would happen. At the same time, we need to keep in mind that the non-oil imports have also been increasing quite significantly. that clearly shows the divergence that is existing between the global versus the domestic demand, wherein demand domestically is playing catch up post-pandemic, and hence the non-oil imports are relatively much more firmer.
The wide trade deficit that we saw for June month has surprised most economists and has come out higher than the higher estimates on the street. The estimates were from 22 billion to 24 billion. 25.5 billion is much higher than the higher end of the estimate as well. The non-oil, non-gold imports are also rising. So the trend, we expect this trend to continue, and this will be a big worry going forward for rupee.
All right, that is the latest on the trade data which came out for the month of June and all of the opinion. But with that, let's move on and talk about some stock-specific action. Now, Tata Motors is one of the top gainers that we're seeing on the Nifty today after Chairman N. Chandrasekhar gives a bullish outlook for the business at its annual general meeting. Sonia is here to tell us more about what he had to say. Sonia.
So it's more of the same, but just the fact that there was so much confidence exuded by the chairman of Tata Motors, that has given rise to the stock as well. N. Chandra saying that the second half of the fiscal will be much better than the first half because there are a lot of tailwinds for the sector. He also reiterates the guidance of achieving a near zero net automotive debt by FY24. Now, a couple of tailwinds or positive triggers for the sector. One include the commodity prices that are stabilizing. The management does say that the semiconductor situation has also improved, although things have not normalized completely just yet. And they also talk about how across segments, whether it's Jaguar Land Rover or the passenger vehicle space, even the commercial vehicle space, demand is definitely improving. Enquiries are gone up. And now that the supply side challenges have stabilized, their production levels have also gone up across most segments. In fact, let's listen in to what the chairman had to say at the annual general meeting.
We are determined to achieve the debt-free target. We think it is stabilized. The commodity prices more or less stabilized. We think that we will be in very narrow bound for the rest of the year. We are hoping that the second half of the year will be significantly better to the first half of the year. So if that happens, then we'll be in a better position to talk about this. I think the auto sales number, especially in the passenger car, we expect it to continue. We achieved almost 360,000 vehicles last year, from 220,000 plus vehicles to 360,000 vehicles. And this month, as you have seen, we have touched 45,000 vehicles. It's our belief that we will cross 500,000 vehicles this year. And we have created a lot of capacity in order to be able to produce the cars to meet the demand.
All right, N. Chandrasekharan giving the outlook for the auto industry and Tata Motors. Moving on then to the consumption space, and Titan is one stock which is on our radar today on the back of the bullish management commentary from its annual report. So take a look at that particular counter. Yes, from the peak, it has softened a little, but still with good amount of gains. In fact, my colleague Shilpa Ranipeta is here with the highlights of what they had to say in the annual general meetings, highlights as well as the way forward for the company. Shilpa.
In its annual report, Titan has highlighted that it is going to look at an aggressive store expansion and a lot of focus on a couple of new businesses or other businesses like its fashion accessories business, its ethnic wear, fragrances and wearables business also. Let me run you through division by division what it has said. Now for the jewelry business, which is under the Tanishq brand, it has in fact added already 78 stores in the last fiscal, taking that to 582 stores, and it wants to take this total number to 700 over the next couple of years. Now, these will be a mix of both company-owned and franchisee stores as it looks to de-risk operations. Now, it's also eyeing international expansion plans here with a new store, its first store in North America, set to open in early FY23, and then it will soon expand to multiple locations in West Asia and in North America. Now, in the wearables business, it wants to become a prominent name here. So it has lined up a whole host of new launches, especially also in the hearables and audio accessory space, and it is also renovating all the Titan World or the Helio stores into a new format as well. Now, for the eye care division, it is investing again in significant store expansions, not just in metros but also in the smaller cities. It has already added about 134 Titan Eye Plus stores, and this is the largest expansion for the company by date in the eye care division. And it is also going to add another 250 to 300 stores to take the total store count to about 1,000 by the end of this fiscal. Now, in the fragrances, fashion accessories, and the other businesses also, women's bag Titan has identified will be one strong area of focus. And its ethnic wear, the brand also, which is Tanera, that is also something that it is betting in, that it wants to make Tanera a significant contributor to its overall revenue in the medium term. Back to you.
All right, Shilpa Ranipeta, for getting us all those highlights. With that, we'll slip into a short breather on Business Lunch, but don't go anywhere. More news and updates on the other side.